Hi, I'm James Murray and I run a finance brokerage in Stamford, Lincolnshire. With over a decade's worth of industry experience, I work with business owners to help bring their growth plans to life. Now, the purpose of this video, along with all of my other content, is to educate and share that experience, giving you straight talking insights into business funding options and strategies. I recently sat down with my friend Duncan on our Make It Your Business podcast, and I wanted to separately share this part of the conversation with you as it could be useful if you're a business owner trying to make sense of your funding options. For the full episode, if you want to check that out, I'll put a link in the description. But for the next few minutes, you'll hear me talk about the real risks business owners take, why choosing the right finance product matters, and what to look out for before you sign anything. We cover the difference between asset finance, business loans, overdrafts, and invoice finance, plus a few useful points on the growth guarantee scheme, and why some businesses get declined for funding in the first place. If you're thinking about applying for finance, or you just want to understand how lenders make decisions, this clip will give you practical guidance you can use straight away. And it'll give you a clearer sense of how working with a finance broker can save you time, improve your options, and help you avoid those classic pitfalls. If you'd like to discover more about the services I offer at James Murray Finance, you're welcome to visit our website at jamesmurrayfinance.co.uk or explore the other videos on this YouTube channel. But for now, take a few minutes, grab a tea or coffee, and I hope this short clip helps you make better, more confident decisions when it comes to funding in your business. Enjoy.
Like the money needs to be working for you. I probably sound like a broken record here, but as long as you can, and there's always an element of risk. There's no guarantees in this world. There's no guarantees with business. I mean, any entrepreneur, any business owner knows that you didn't start a business because it was easy or because it was risk-free, but you took it because you decided to do it because you wanted the liberation of running your own business and you wanted the untapped potential. And, well, might be speaking for people there, but I think that's generally one of the core motivating factors of 100%. Starting a business. So you have to sacrifice a lot up front, but you potentially get bigger rewards down the line and during. And but this is just another sacrifice. It's another risk factor that you have to account for. Mm-hmm. And if it's done responsibly, I always say, if you've got a good accountant, they'll run the numbers for you as well. So talk it through with people. Talk it through with another business owner. A proof of concept. Anything where you're trying to. I'd say most businesses that I speak to have been trading a little while. There's a proof of concept that they know where the funds are going to be deployed. So it makes my job a lot easier because of the proposal write-up. With the New Start loan, it's a bit different because it is probably more of a business plan. Yours is unique because you're a bit further down the line. So I would assume that yours will be successful. Mm-hmm. But yeah, it's my recommendation to anybody, and kind of put it back to the GGS loan, really, and the growth guarantee scheme, you still need to treat it like any other application. The funders want to see that you are a responsible borrower, that the funds are going to be utilized in the appropriate way, and effectively it's going to be repaid. And you still have all of that work. I mean, my write-ups, when I do an application, this is one of the things I'm trying to educate people on. Just don't click those links. Don't just, if you get email advertising, and you will have had it, if you're still watching this and you're a business owner, you will have had an email this week saying, get X amount of money, just click here, 2 clicks away, have the funds in your account in 24 hours. It all sounds great, but at the end of the day, it shouldn't be treated like a comparison site. Get shopping for your car insurance. It really shouldn't. It's detailed. Each business is unique. Each business has unique challenges, and it requires somebody to look at it in detail and explain the different solutions to businesses. So let's say, go back to the £100,000 example. What I would do with a client is I would sit them down and sort of say, okay, right, what are the funds being used for? In the first line, I might hear that they're buying machinery and equipment and doing a shop fit out. Well, they don't necessarily need a short-term, quick 24-hour loan. Of course. They need something way more structured. Then there's a whole story, a narrative that I then get to understand. Mm-hmm. And the benefit of that is that it might have a lower cost of finance. So the interest rate might be lower. Well, then might attach it against the assets. So although they might seem like they're not assets they're buying because it's shop fittings and things like that, and mezzanine floors and that sort of thing, well, these can still be treated like asset finance.
Yeah.
And it can also be done on the GGS loan. So what we might do is that actually say, look, there's an option A, which is a GGS loan secured against this, this and this, but here's the downside, it's a bit more expensive. But we've actually got this other option, option B, which gives you a bit more availability, a little bit extra cash in the bank, and it's lower cost, but it's got higher, but there's more security, and there's more the personal guarantees are more thorough. And by speaking with again, I'm going to say this, I've got a vested interest in somebody speaking to a broker, but if you also go to some of those online platforms, they have a marketplace themselves, and they might shotgun your proposal to many other funders as well. And it might not even be for GGS, and you might just get, you've been approved for this, or this has come back. And then if they speak to a broker down the line, sometimes my hands are tied, because I can't then approach some of those funders for a set period of time because they've already been approached. And even if I could, there's already a proposal. Let's say they've been declined on finance. They may have been declined based on that business not taking the full story.
Right.
So whereas I might then have this full narrative of the reasons that the cash flow dipped last year, and also we've got negative shareholders funds, but there's a story behind it. I can explain why that is, and try and pigeonhole it to the right funder. If it's just been sort of a algorithm-led online platform where they just shoot off your proposal based on core information, that decline has been based on that information. So when you speak to a broker like myself, we end up looking at a much more we take a much more holistic approach. We look at the whole picture and then work out, rather than that shotgun approach. It's much more of a sniper approach. So we identify the most appropriate ones, come back with a few solutions, and then present it. And some of those might be growth guarantee scheme, and some might not. But I think, going back to the point we made at the very start, just because it says government, just because it says government backed, or it's growth guarantee, the word guarantee, they can be a bit misleading. So I think it's just about reading the small print, speaking to a broker that you trust. Doesn't have to be me, but somebody that you feel has got your best interests at heart, and then going through the options from that, slowing down a little bit. Doesn't mean that it's going to take months. You can still get, I do funding agreements that first contact has been on the Monday and it's all paid out in the same week. So it's not like it's going to be slow. It might just be a little bit slower, but you get so much more. So
well, it's worth taking the time. I mean, if you need a loan that quickly, then I would suggest it's probably not for investment. It could be an opportunity that's suddenly come your way, I suppose.
A lot of 90% of the time you've waited too long. So around it depends on the time of year. Quite often going into sort of the winter, some businesses, construction businesses like that, they might get their corp tax in January, and a load of outgoings go out and in over that period, and then they come to me at the end of January or February, and they're in a worse position than they would have been if they'd looked for funding in October or November.
Right.
So actually, if you can foresee, and again, this is where the cash flow forecast comes in, and looking ahead, if you can foresee a bit of a hill on the horizon, prepare for it before you've started walking up it, because you're going to be in a much better financial state to be able to get better costs of funds, better options. Your accounts are going to look healthier. So when we go and get the funding, it's just going to be a much better case study than going when you've already had some missed invoices, you've got some bounce payments, you're late on your corporation tax, you've had to take a time to pay on your VAT or something, all these things that then are red flags to lenders. So if you feel that you're about to go through a period of instability, or a period of where you working capital might be a bit tight, you just prepare for it ahead, and as long as it's done responsibly, and you and again, that capital could be deployed to help you through that period anyway. And we're talking about all sorts of things. Again, it's not necessarily an unsecured loan. It could be asset finance. It could be invoice finance. It could be, it could even be an investor. Even if you're approaching an investor, you're much better approaching him or her before then.
Of course,
saying, "Oh, I'm about to go through these projects. I'm fearing that I might potentially be over trading soon because I've got all these contracts I want to win, but the payment terms are really long and I need to deploy all the money up front to get the jobs in progress. Would you like to do would you like to do a JV, a joint venture on this deal, or would you like to, you could become an investor in the business? Much better doing it at the start, because it shows also that you're thinking of these things, and you're, again, a responsible person within the business.
100%.